This trade lasted only 2 minutes. I was done trading at 8:43 a.m. But the trade didn't start at 8:41. It started before the market even opened. Let's break down exactly why I went bearish here. This is PLTR on the 1-minute chart. The red line here is yesterday's high. Before the market opened, I already knew one thing. If price pushes into yesterday's high and shows rejection, I'm looking for a structure. The market opens down here, pushes up, touches yesterday's high, rejects, it pulls back, pushes up again, rejects again. That's information. Now we have repeated failure at the same level here. Then a small flag forms, but not randomly. It forms directly under yesterday's high. That's the key. Most traders see the flag. I see location. Because a pattern by itself means nothing. A flag in the middle of nowhere, it's noise. But a flag under a major resistance is a structure. When broker lower, my entry was here, my stop was up here, and my target was down here. Defined risk, defined target, no guessing. And this is important. I didn't go bearish here because it looked good. I went bearish because location plus the pattern equals structure here. Yesterday's high plus rejection plus the flag equals edge. That's the combination that makes these setups work most of the time. 2 minutes later, target hit, the trade was over. But here's the real part. The win isn't the money. The win is that I waited. I didn't short the first touch here. I didn't anticipate the break. I didn't force anything. I let the market come to me. I let the market prove weakness first. That's discipline. And discipline compounds more than any single trade ever will. Tomorrow the goal doesn't change. Show up, wait for a structure, execute the plan, and accept the outcome. And always process over profits and discipline over dopamine. That's the real trade.